Amazon stock is down 5% after the company announced its fourth quarter 2024 earnings results. The business reported strong numbers and growth, but the market is continuing to sell it off in after-hours trading. So in today's video, I want to discuss the highlights from Amazon's earnings, why I think the stock is selling off, and if it is looking like a buy now. So with that being said, let's just hop right into the video. As always, I went through Amazon's earnings report and I took screenshots of all of the highlights that I found, so let's dive into them. Right here, we can see that for the fourth quarter, net sales increased by 10% to $187.8 billion for the fourth quarter. North America segment sales increased by 10% year over year, international segment sales increased by 8%, and AWS segment sales increased by 19% year over year to $28.8 billion. So AWS is continuing to grow very strong, and later on in this video, I am going to show a graph of AWS, Google Cloud, and Microsoft's cloud growth rates to see how they're all comparing after this quarter. Going back to the earnings release though, operating income increased to $21.2 billion for the fourth quarter compared with $13.2 billion last year. So operating income increased by roughly $8 billion year over year for the fourth quarter, which was growth of something like 60 to 70%, which is a massive growth rate. AWS's operating income came in at $10.6 billion compared with operating income of $7.2 billion in the fourth quarter of 2023. So AWS's operating income also increased by roughly 40% year over year. So a massive boost to AWS operating income. Let's take a look at the full year now. And here we can see that net sales increased by 11% to $638 billion for the year of 2024. That is a ridiculous amount of revenue. AWS segment sales increased by 19% to $107.6 billion. And this is the first year that AWS has broken $100 billion in revenue for the year. And going forward, AWS is doing about $116 billion in annualized revenue now. So it's continuing to grow very well. Operating income also increased to $68.6 billion in 2024, compared with $37 billion in 2023. So operating income for the full year almost doubled. Moving on, operating cash flow increased by 36% to $116 billion for the trailing 12 months. Free cash flow also increased at $38.2 billion for the trailing 12 months. And as I have said previously on my channel, the main metric that I focus on for Amazon is operating cash flows because the business is constantly reinvesting so much capital back into capital expenditures to continue growing the business. So operating cash flow is really what I look at here. And I am happy to see that it is hitting all-time highs and grew 36% year over year. So right off the bat, this does seem like a pretty decent report from Amazon. Revenue is growing double digits, operating income is up massively, AWS is growing by 19%, AWS operating income is up something like 40%, operating cash flows are up to 36%, and the company is still producing tens of billions in free cash flow. So let's continue going through the earnings report to figure out why the stock is dropping then. Here we can see Amazon's first quarter 2025 guidance, and they're expecting net sales to be between 151 and 155.5 billion, which is growth between 5 and 9%. And I think that this is partly why the stock is falling in after hours, because this guidance for the first quarter really isn't that much year over year revenue growth. I mean, 5 to 9%, that's 7% right in the middle there. So this isn't an exciting revenue growth rate. And I think that the market was maybe expecting a little bit more from Amazon in the first quarter. Also, Amazon says operating income is expected to be between 14 and 18 billion, compared with 15.3 billion in the first quarter of 2024. So basically, Amazon isn't expecting that much more operating income growth in the first quarter of 2025. And I think the market is not bullish on this because this is essentially saying that Amazon is not expecting its profits to grow very much at all in the next quarter. All right, let's move on to Amazon's cash flow statement now. And here we can see that for the fourth quarter, they generated $45.6 billion in operating cash flow, which was growth of about $3 billion year over year, or about 7% growth to operating cash flows. This is also not a large amount of growth to the company's operating cash flows on a year over year basis. So I do think maybe the market is looking at this number and seeing some pretty low growth rates and maybe being a little bit bearish on this as well. However, for the full year, Amazon generated roughly $116 billion in operating cash flows, which was growth of 36% as we said earlier. Here we can also see Amazon's capital expenditures for the fourth quarter were $27.8 billion, which was almost double year over year. So Amazon's capex did grow significantly year over year. Now for the full year, Amazon spent $83 billion on capital expenditures. And to put this in perspective, Google just announced that for 2025, in its 2025 outlook, that it's expecting to spend $75 billion on capex. Well, those are baby numbers because in 2024, Amazon already spent 83 billion. So Amazon is spending more in capex than Google is projected to do in 2025. And Google, its stock dropped when they announced that they were spending $75 billion on capex this year. So I think that, maybe the large capex, we're going to talk about this a little bit later on in the conference call transcript, but I think this is another reason why the stock is down slightly in after hours, because the capex at Amazon is growing quite rapidly. Now let's move on to the different segment results from Amazon's business, and I really just want to take a look at AWS. And here we can see in the most recent quarter, AWS revenue came in at that $28.8 billion, but take a look at the operating expense growth year over year, because revenue grew by roughly 4.5 billion, but operating expenses only increased by 1.1 billion. So the vast majority of this revenue growth became operating income growth as well. And operating income grew by $3.5 billion on a year-over-year basis, which is actually about a 50% growth rate to operating income. So Amazon's AWS operating margin is continuing to expand, and the operating expenses are not growing that much relative to revenue. So as this business continues to scale, we may see its operating margin continue to expand. Now for the full year, AWS's revenue increased by about $17 billion, but once again, its operating expenses only increased by $1.6 billion. So almost all of that $17 billion increase in revenue became operating income growth for AWS as well. And I think that this is an absolutely fantastic thing to see. Because again, as AWS continues to grow in the future, it's probably going to continue increasing the operating margin and improving Amazon's overall profitability quite dramatically. But now let's take a deeper look at Amazon's different business segments and their growth rates. And here we can see that online stores saw a 7% year-over-year growth rate, physical stores saw 8%, third-party seller services saw 9%, advertising revenue was 18%, subscription services 10%, AWS 19%, and other 17%. Now, what I also like to pay attention to is, are the growth rates accelerating or decelerating? And with third-party seller services, we can see that the revenue growth is actually decelerating quite a bit. It went from about 18 to 19% in the fourth quarter of 2023 to consistently dropping down to 9% in this quarter now. This is the same story with Amazon's advertising services. It grew by 26% last year in the fourth quarter, and it has been consistently dropping down to 18% now. Subscription services also looks like its growth is slightly decelerating, but what's interesting is AWS's revenue growth rates have accelerated over the past year, and now they're maintaining at 19%. So it seems like Amazon's other large business segments may be seeing some decelerations in revenue, but AWS is really carrying the team and seems like it is continuing to perform very well. All right, as promised, let's go take a look at AWS's revenue growth, Google Cloud's revenue growth, and Microsoft Cloud revenue growth. And here we can see that Google came in at the best, seeing 30% growth. Microsoft was second at 21%, and AWS was third at 19%. But what's interesting is Microsoft Cloud revenue has kind of been decelerating over the past 5 quarters. And in the most recent quarter, it actually saw quite a bit of weakness. Now, Google Cloud saw very strong revenue growth in the previous quarter at 35%. So Google Cloud's revenue growth does seem like it did drop slightly in the past quarter at 30%. And overall, it does seem like Google Cloud and Microsoft Cloud had pretty weak quarters in the fourth quarter. But with AWS, they are maintaining that 19% growth rate. And it's also worth noting that AWS is the largest cloud provider by far. So the fact that it's still growing at almost Microsoft Cloud growth rates, I think is still very bullish for AWS. So now let's head over to Stock Unlock to take a look at some of Amazon's different KPIs here. And here we can see that AWS revenue is continuing to hit all-time highs with that $28.8 billion in revenue in the last quarter. And if we take a look at the trailing 12 months view, it has now produced that $107.6 billion in revenue. Also, if we take a look at the percent changes, we can see that the revenue growth rates are still remaining quite strong. And I do think that this is a good thing to see. Amazon subscription services revenue is also continuing to grow strong and hit all-time highs of $44.4 billion in the trailing 12 months now. Advertising revenue is also continuing to grow strong, with $56 billion in trailing 12 months advertising revenue now. Let's turn on the percent change here, because we can actually see that the growth rates to advertising revenue did kind of slow down from 2023 throughout the remainder of this year, but the advertising revenue is still growing extremely well, and the growth rates don't seem like they're down that much. Third-party seller services revenue also hit an all-time high of $156 billion in the trailing 12 months, and it looks like these growth rates are decelerating slightly over the past couple of years, but the growth rates are still remaining pretty dang strong. So overall, it does seem like Amazon's different business segments are continuing to grow and hit all-time highs, and I do think that this is a great thing to see. So now let's talk about Amazon's price in after-hours trading and after this earnings report. So at the market close, Amazon had a market cap of $2.48 trillion, and it is down 5% in after hours. So in after hours trading, the company is now valued at about $2.356 billion. Now, in the trailing 12 months, they did produce $115.9 billion in operating cash flows, which means that Amazon is now trading for 20.3 times operating cash flows. And here we can see that over the past decade, Amazon's average price to operating cash flow has been about 27. So the stock is still trading well below its historical average price ratios, and this could suggest that the stock is trading for at least fair value today, if it is not actually undervalued. I think the one argument here is that Amazon is a much larger business now, and I do think that as businesses grow, it becomes more challenging for them to maintain high rates of growth. Or basically, historically, Amazon's business was actually growing faster, and therefore it could have commanded a higher multiple. Now the business is much larger, it's probably going to grow slower, so I do think that it does make sense for the business to trade at a slightly lower multiple, but it's still selling quite a bit below its 10-year average of 27. And therefore, I do not think that Amazon is looking very expensive in after-hours trading, and this is the one Magnificent 7 stock that I have actually continued to buy in my portfolio, at least over the past couple of months. I believe my last buy was around $200 per share, but this is the one Magnificent 7 stock that I have been continuing to add to my portfolio and build out my position over the past year or so. So lastly, let's head over to Stock Unlock's discounted cash flow calculator, and let's project out Amazon's operating cash flow over the next 5 years to see what the market is currently pricing into the stock today. So what I did is I entered the metrics in Stock Unlock's DCF calculator to find a 10% compounded annual growth rate. And right now, for Amazon stock to compound at 10% annually, it has to continue growing its operating cash flow at about 10% annually over the next 5 years, and to maintain a price to operating cash flow of 23, which is still below the company's historical average of 27. Now, personally, I think that Amazon can actually do this and grow faster. I would not be surprised if Amazon could continue growing its operating cash flows by something like 12% annually, because AWS is still growing revenues at 19%, and this is really the profit driver for Amazon's business. And as we saw, its margins are continuing to expand, its operating expenses are not growing with revenue, and I think that as AWS continues to grow, it's going to become a larger and larger portion of Amazon's business, and therefore Amazon's overall business should see margin expansion, which should ultimately result in its profits or its profitability growing at a faster rate than revenue, as more revenue is converted into cash flow. And let me really quickly show you what I mean here. So we're taking a look at Amazon's gross margin, and we can see that back in 2011, it was 22%, and now it's sitting at around 48.4%. And we can very clearly see that Amazon's margins and profitability has grown extremely well over time. The company's operating margin is also continuing to explode and grow, and this is largely because AWS is becoming a larger and larger portion of the business, and AWS's margins are extremely high and continuing to grow. So once again, I don't think that it's unrealistic for Amazon's profits to grow at double-digit growth rates due to margin expansion that could happen over the coming years. So now let's quickly go over to the conference call highlights. So the first point here is that AWS growth will be lumpy in the next few years. The CEO of Amazon did say this, and he was basically saying, do not expect AWS's growth rates to be consistently going up or down or whatever. He was just saying that he thinks the growth here is going to be a little bit lumpy, depending on demand and the capacity that AWS actually even has. However, he is confident in the long-term growth of AWS and AI. The future of the world will be built on cloud, and he believes that it will largely be built on AWS. He also says that most chips today are obviously made by NVIDIA. However, Amazon has built its own chips that apparently have better performance or better price performance. He said that Amazon's own chips have about 30 to 40% better price performance than NVIDIA chips. So that is a great thing to see, that Amazon is diversifying away from NVIDIA. They do still buy a lot from NVIDIA, but it sounds like they are trying to diversify away. Now, the big thing here is that Amazon spent $27 billion on capex in the fourth quarter, and when asked about this, the CEO basically said that the $27 billion in capex they spent in the fourth quarter will be the quarterly run rate for 2025. Or basically, they're projecting to spend over $100 billion in capex in 2025. And when they announced this, the stock fell immediately. So I think that this was the big thing right here. I think that the market really does not like to see how much money all of these AI hyperscalers are spending on capex, because it seems like the market and investors are uncertain if this literally hundreds of billions of dollars in capex is going to produce a high ROI, or if it is kind of just like a speculative spend. So really, the question is this capex worth it? And then the CEO came in and said, this is a once in a lifetime business opportunity. We don't procure capex unless we see the demand. So basically, Amazon CEO said Amazon will not spend $100 billion on capex unless it is absolutely certain that there is demand there and that it will pay off. Amazon is confident that the capex is worth it because they spend to grow AWS. Every application today will be reinvented with AI in it. AI represents the biggest opportunity since the cloud and the internet. AI is a multi-billion-dollar business today that is growing at triple digits. And this is why Amazon is saying that they believe AI is potentially a bigger opportunity than cloud because it's growing faster than cloud was. And it sounds like their AI business is just exploding. We could be growing faster without constraints on capacity. This is to kind of echo what Google said in their most recent earnings report, because Google said that the cloud business could have actually grown faster if they were not constrained. And Andy Jassy said the exact same thing. He said that he thinks AWS could have actually seen accelerated growth if they were not constrained on multiple fronts with chips and even power. He said power constraints, literally getting electricity, is causing the business to grow at a slower rate, which I think is good for Brookfield. And then he said constraints will dissipate in the second half of 2025. So overall, it does sound like Amazon is very bullish on this $1 billion in capex spend for 2025, and they think that it's going to get a high ROI. So in my opinion, this was a decent quarter from Amazon. It wasn't a blowout quarter like Meta's was. Meta was an absolutely insane quarter, but this was a good quarter from Amazon. They do have some things that I did not love, like the operating cash flow in the fourth quarter, only growing by about 7% year over year. It looks like the Q1 guidance is also pretty weak, and it seems like different business segments over at Amazon are decelerating quite a bit on a year over year basis. But overall, I do think that Amazon is still fairly valued in the market. And if I didn't already have a position, because Amazon is a pretty decent position of mine, I would be looking to buy more. But currently, I am happy with my position and my allocation to Amazon. So for me personally, right now, it's a hold. And I do think that Amazon is selling for around fair value based on my DCF. It could maybe compound at about 11 to 12% annually going forward if the business can continue to grow profits. But that's not like drop dead, I got to go and buy more shares today. If Amazon stock does come down more, though, then I would be much more compelled to increase my position. But right now, I'm happy with its price and I'm happy with my position. But with all that being said, that is going to wrap up the video for today. So if you enjoyed the video, then please remember to leave a like on it. And if you're new here and you want to see more stock market related content like this, then please consider subscribing to my channel. But with all that being said, as always, I truly appreciate you guys tuning in, and I hope to see you all again in my next video.